Hi, Casey from Central 21 Novocastrian, and today we're in the office with Aaron from Better Tax Depreciation. Thanks for coming in.
Thanks for having me.
So I thought today we'd just have a quick chat about what is a tax depreciation schedule and how do landlords go about sourcing them, who can do them, that kind of thing. So,
Yep.
do you want to start me off?
Sure. So us as quantity surveyors, we're seen by the ATO as the most suitably qualified professionals to produce these reports. They're a specialised report for a property investor, landlord. So they're able to claim the property depreciation in their investment property as a tax deduction each financial year. So what we'll do is we'll get some various details about the specific property,
Yep.
undertake an inspection and full quantity survey of the property itself. So we can collect all the specific details about that property, and then we can crunch all the numbers and prepare our depreciation report, so the landlord or their accountant can then refer to that each financial year to be able to, I guess, unlock and claim those additional tax deductions that they would otherwise miss out on.
So by law or under the ATO, we have to have, or landlords have to have, this depreciation schedule to be able to claim depreciation on a property, don't they?
Yeah, that's right. So there's a few different ways that people can source that, but I guess as quantity surveyors, we provide that specialised service to assist accountants
Yep.
in kind of providing those figures that they need in order to lodge those additional tax deductions.
Yeah,
So,
and to get those maximum returns. So.
That's right. So it can really make a big difference to, I guess, the bottom line of an investment property from a cash flow perspective, or when you crunch the numbers, if you do it with and without a depreciation report, it can often make quite a bit of difference. When you compare apples with apples, with and without.
Definitely, and it can be thousands of dollars, can't it, at the end, and even over the period. So how long does a tax depreciation schedule last for?
Well, I guess roughly, so ours is it's a one-off report, and it provides a 40-year depreciation schedule.
Yep.
So I guess the life of a property from a depreciation perspective is 40 years.
Is up to 40 years.
Yeah, and there are different components within the building, like your different assets, they have shorter lifespans.
Yep.
But
so some appliances only have a lifespan of, say, 7 years, or carpets and paints.
That's right.
10 kind of years sort of thing, isn't it?
Yeah, that's right. And then there's the main building component, which is generally your 40-year lifespan.
Yeah, which is your bricks and mortar.
That's it, yeah.
Fantastic. And so if a landlord wanted a depreciation schedule, are they used for all properties, or do we just use them on new properties?
Yeah, good question. It's one that is a bit technical. There's a few different legislations and rules and regulations that the ATO have in regards to that. So it is important to get the right advice.
Yep.
And to contact a quantity surveyor like ourselves, just to make sure you're going about it the right way. So I guess the newer the property, the more depreciation there is, and then it's on a sliding scale from there. So whether they're new residential properties or even older residential properties that have had renovations and additions done to them, they can all qualify in different ways. And it's just important that we sit down at the very start, talk about how the clients acquired the property, or if they've done works to an existing property, and there's different angles that we can look at their eligibility to claim it.
Yep.
And then can go from there. But
so it's really about asking the right questions from the start and having that conversation with a quantity surveyor to really see if it is worth having the schedule, or how to get the schedule and then apply that to the tax return. So different methods of claiming a depreciation for different types of properties, basically, isn't it?
Yeah, that's right. So we just like to ask a lot of those questions at the start with the landlord, and even getting in touch with their accountant and just making sure exactly what the accountant needs is what we're providing.
Yep.
So what we say is just if you're unsure whether you qualify or not, or whatever it be, just get in touch with us. We can do some pretty good online searches about the property, do a bit of background research, and go through a bit of an eligibility criteria analysis. and kind of talk the clients through their cost versus benefit around some of those things, and then they can talk further with their accountant or financial planner around those, and make sure they're making a good step in getting this done.
Fantastic.
But we provide all that type of thing, free of charge up front.
Yeah, so
if it's not going to be worth their while, there's no charge. Obviously we're not going to go ahead with it.
So you kind of make sure that your fee is obviously going to be covered by the deductions prior to going ahead. So
yeah, that's right.
Kind of like a no risk.
Yeah, that's right. Yep, no risk, just to make a phone call or drop us an email.
Yep.
And yeah, happy to take an obligation-free, assessment of the eligibility. So,
fantastic. Thanks for your time today. I will put Aaron's details in the links below, so please get in touch or feel free to reach out to your property manager. We're here to help and to ensure that you are claiming the maximum deductions and maximising your income on your investment. I'm Casey Healy. This is Aaron from Tax Depreciation. Thanks for being with us.
Thanks very much.